Hello everyone, in today's session we will be discussing source documents of accountancy. Now first let us see what is meant by origin of transactions. Various transactions are made in a business every day, such as purchase and sale of goods and services, receipt or payment of cash, and so on. Each business transaction should be supported by documentary evidence such as cash memo, cash receipt, invoice or bill, debit and credit notes, pay-in slip, check, etc. These business documents are called source documents. Now, all those documents which is an evidence of a transaction are known as source documents. Now, there are different types of source documents such as cash memo, cash receipt, invoice or bill. Those things we will discuss in detail in this chapter. Now, what are source documents of accountancy? Now these documents are the first record about the details of a business transaction. That means they are the documents which will record first the details of transaction. Such documents report the date. What we will find in these documents are date of the transaction, amount, then which parties were involved, and the nature of transaction. Nature of transaction means whether that transaction was sale of anything, whether it was purchase of anything, whether it was for paying rent, commission, or something like that. Then entries in the books are always made from the source documents. Now for recording in books we need source documents. According to the verifiable objective principle of accounting, each transaction recorded in the books of accounts should have adequate proof to support it. That means each and every transaction that we are going to record in our books, it should have a proper and authenticated proof to support it, means document. Okay, and those documents are nothing but source documents. These documents are the written and authentic proof of the correctness of the recorded transaction. Means you cannot deny this kind of documents or evidence. These documents are required for audit and tax assessment. For auditing as well as for filing income tax, these source documents are very much important. They also serve as legal evidence in case of a dispute. The following are the most common source documents. Now let us see what are different types of source documents. Now first one is cash memo. When a trader sells goods for cash, he gives a cash memo. Suppose you are the owner of a business, and when you make cash sale, you will obviously provide a cash memo to the customer. And similarly, when you go to a shop and if you purchase anything, then you will receive a cash memo. Now remember that cash memo are provided only for cash transactions. Only for cash purchase and cash sale, cash memos are prepared. Details regarding what item you have purchased or you have sold, at how much quantity, what is the rate, and what is the total price. All these things will be mentioned in the cash memo. Cash transactions are recorded in the books of accounts on the basis of these cash memos. Means all the cash transactions of a business will be recorded in books of accounts based on these cash memos. Now let us see one specimen or one example of cash memo. Now this is a cash memo of Global Watch Company. They have sold two items, that is Titan Regalia and Titan Raga. So the item which they have sold is mentioned, quantity is mentioned, rate means price per unit is mentioned, and total amount, total price is mentioned. Plus if there is any discount, that discount is also mentioned in the cash memo. So altogether Global Watch Company, they have received 11,070 rupees. Now let us see what is meant by invoice and bill. Now we have seen that all the cash transactions will be supported by cash memos. What about credit, sale and purchases? Now all those credit transactions will, the source for those transactions will be either invoice or bill. Now let us see what is invoice and what is bill. When a trader sells goods on credit, he prepares a sale invoice. Now while selling goods on credit, imagine yourself as an owner of a business and you have sold some goods on credit. Then in that case what you will do is that you will prepare an invoice, and in that invoice you will mention the name of the party to whom you have sold goods, the rate means price per unit, then how much quantity of that item you have sold, and what is the total amount of sale will be mentioned. Now, for providing invoice, the original copy of the sale invoice is sent to the purchaser, means you will give the original copy to the customer, and a duplicate copy, that means a Xerox copy, will be kept in your business for recording it in your books of accounts. Okay, now this was about invoice. Now let us see what is meant by bill. When a trader purchases goods on credit, suppose, imagine you are the owner of your business and you have purchased some goods on credit from a supplier, then in that case what will happen is that you will receive a credit bill, okay, from the supplier. The supplier will give you a credit bill, and that is your source document for credit purchase. When we make an invoice on credit sale, means imagine you are selling goods on credit, then you will prepare an invoice. But when you are purchasing goods on credit from any supplier, then you will get a bill. So here it is mentioned that, but we receive a bill on credit purchase. Don't forget that while selling goods on credit you will provide an invoice, but when you purchase goods on credit you will receive a bill. Though the two items are used synonymously and mean the same thing, specimen of an invoice or a bill is given below. Sometimes you might get confused between invoice and bill, but there is a little bit difference between these two. Now, an example of invoice or a bill is given. Now, quantity is mentioned, item is mentioned, rate is mentioned, then total amount is also mentioned. Now next source document is received. When a trader receives cash from a customer, means if you have made any credit sales and later that customer is paying you any cash, or you are receiving cash for anything from a customer, then what you will do is that you will issue a receipt, and in that receipt you will mention the date, amount, and the name of the customer who has given you cash. Now the original copy of the receipt is given to the customer, and its duplicate copy is kept for making records in the books of the accounts. Means the origin, same as in the case of invoice, the original will be given to the customer and Xerox copy will be kept in your business for recording in books of accounts. In the same way, whenever we make payment, we obtain a receipt from the party to whom we make payment. Means similar, when you are receiving cash from your customer, you pay a receipt. Similar, when you pay cash to your supplier, that supplier will give you a cash receipt. Then next is debit note. When we return goods to a supplier, we prepare a debit note and send it to the supplier with the returned goods. Means, let's take example that you have purchased some goods from a supplier, but you didn't find those goods suitable, or there are some defects in those goods. Now what you will do is that you will return those goods to the supplier, but along with the goods you have to prepare one document that is known as debit note, and in that debit note you will mention all the necessary information, and along with the returned goods you will give that debit note to the supplier. Now debit note is a document which indicates that supplier's account is being debited. Means when you give a debit note to a supplier, it means that in your books of account you are debiting the supplier's account. It is a source document which contains date of transaction, the name of account which is debited, and the amount and the reasons for debit. A duplicate copy or the counterfoil of the debit note is retained by us. Means you will keep the duplicate copy of the debit note, and the original one you will send it to the supplier. Now there is an example of debit note. Means here you will write the name of your company or your business, then address will be there, then to name an address for the person to whom it is sent, you will write the name of your supplier in here, then you will mention that you are debiting his account and the quantity of the goods that you are returning him and the reason as well. Like in this case they have mentioned that the torches are badly damaged. Now, credit note. When goods are received back from a customer, a credit note is sent to him indicating that the customer's account has been credited in our books. A duplicate copy of the credit note is retained for record purpose. Now, while returning goods to the supplier, you give debit note. But in some cases, suppose you have sold some goods to customer and the customer they are returning goods to you, then you will receive debit note from them, and in return you will issue a credit note to the customer mentioning that his account has been credited in your books, and the information in that credit note is same as that of a debit note, means the name of the customer whose account is being credited in your books, plus the amount or the quantity of goods and reason for return. All those things will be mentioned in the credit note. Then next is pay in slip. This is a form available from a bank and is used to deposit money in the bank. Now if you have ever been to a bank for depositing money, then while depositing money, the form that you fill up, that small slip, that is known as pay in slip. Now after handing over money along with that slip, what they do is that the bank people, they will put stamp and signature in that slip, and they will keep a part of that slip with them, and the small part that is known as counterfoil will be returned to you by after putting stamp and signed by the cashier of the bank. Now that form that you fill up for depositing money is known as pay in slip. The next is check. A check is an order in writing drawn upon a bank to pay a specified sum to the bearer or the person named in it. Now check is very easy, means it will be a document in which the name it is a document in it will when the holder of that check goes to a bank and shows it to the bank authority, what they are supposed to do is that it is an order. A check is nothing but an order given to the bank persons to hand over certain sum of money mentioned in that check to the people or to the person holding that check, or if a particular name is mentioned in that check, so the amount of money will be payable to that particular person. Now this is a format of check. Now in here, pay means if a person's name is mentioned in here, then that certain amount of money will be handed over to that person. Then here the amount of money will be filled up. In addition to the above, there are certain other sorts of documents: bill receivable, bills payable, wages sheet, correspondence, etc. They all serve as source documents. Now let us see what is meant by voucher. In our first chapter, we have seen that on the basis of source document, first we will make vouchers, and based on vouchers we will record transactions in journal or books of original entry. Now vouchers are printed separately by all the firms in their own names, means each and individual business they will print vouchers in their company or business's name. A separate voucher is prepared for each transaction, and it specifies the accounts to be debited and credited, means in that voucher it will be particularly mentioned which account is to be debited and which account is to be credited. After vouchers are prepared, it is prepared by an accountant, and each voucher is signed by an authorized person of the firm. A serial number is put on each voucher, and the relative source documents are attached with the voucher. Suppose if you have made a cash sale, then you have made one cash memo. Then based on that cash memo, you will prepare one voucher, and after preparing voucher, what you will do is that you will pin together that voucher as well as cash memo, and you will keep it properly in a file with a serial number. The voucher will have a serial number, so that afterwards, while auditing, auditors, they will have proper documents for verifying all your accounts. Now let us see some difference between source documents and voucher. Now source document, they support voucher, while vouchers are supported by source document. Then source document, it is not prepared to record transaction, means they are proof of transaction but they are not prepared to record transaction. But vouchers sole preparing voucher, its main aim is to record transaction. Then source documents, they contain full details of a transaction, but vouchers, they put special focus on which account to be debited and which account is to be credited. Then source documents, it is evidence of transaction, but voucher is a document, based on that document recording of transactions are done. Now let us see different types of vouchers. Now vouchers, they are classified into two types. First is cash vouchers, next is non-cash vouchers or transfer vouchers. Now cash vouchers, they are again divided into two. Debit vouchers for cash payment. If you have made any cash payment, then debit vouchers will be prepared, and if you have received any cash, then credit vouchers will be created. Now let us see what are cash vouchers. Cash vouchers are prepared for only cash transactions, that is either cash receipt or cash payments. There are two types of cash vouchers, debit vouchers and credit voucher. Now let us see what are debit vouchers. Now debit vouchers, they are prepared for those transactions which involves cash payments, such as if you have made any cash payment for expenses, for purchasing goods, for investing somewhere, for purchasing fixed asset, or if you have made any cash payment to your creditors, or for depositing cash into bank as well, you are supposed to prepare debit vouchers. Now what are the contents of these debit vouchers? Now date of preparing voucher will be mentioned, then serial number is a must, then name of account debited, which account will be debited will be mentioned, then narration, that is means you have to briefly explain what kind of transaction was that, and especially the details, necessary details. Then net amount of transaction, how much amount of money was paid. Then source document number, means suppose if you have made any cash payment, then for that you will prepare a source document, and in that source document there will be one serial number, and that serial number will be mentioned in the debit voucher. In case of source document is not available, suppose if for any cash payment the source document is not there, then receipt portion of debit voucher is filled and is used as a source document. In that case, your debit voucher will work as a source document as well. Now if the net amount of debit voucher is 5,000 or more, so means if you have made payment more than 5,000 or 5,000, then what you have to do is that you have to add a revenue stamp of ₹1 with that voucher, as well as the signature of the person, means the person to whom you have made that payment will have to sign on that stamp and voucher. Now there is a format of debit voucher. Now then next is credit vouchers. Now debit vouchers was for cash payment, and the credit vouchers, they are for cash receipts. Suppose if you have received any cash for income, for after selling some goods, after selling investment or fixed assets, or you have received any money from debtors, or you have withdrew cash from the bank, all those transactions will be recorded in credit vouchers. Now usually the following information are mentioned in a credit voucher, like date of preparing voucher, serial number, the name of the account credited, explanation or narration, then amount of transaction, plus source document, that is cash memo number. Now this is the format of a credit voucher. Now This debit voucher and credit voucher was for cash transaction. What about non-cash transactions? For those things, non-cash vouchers or transfer vouchers are prepared. Now these vouchers are prepared for non-cash transactions such as credit purchase or credit sale of goods, credit purchase or credit sale of investment, fixed assets, then return of goods purchased or sold on credit, for providing depreciation or for writing off bad debts. For all these purposes, you have to prepare non-cash voucher or transfer vouchers. Now what are the contents of these vouchers? Date of preparing voucher, same as above two, then serial number, name of account debited or name of account credited, then narration, amount of transaction, and source document number. Now this is the for example or pro forma of a transfer voucher. Now let us see what is meant by compound voucher. A document showing a transaction that contains multiple debits and one credit. Means in this type of transaction only one account will be credited and two or more accounts will be debited. This we will see in detail while passing journal entries, but for now you try to keep remember that compound vouchers are those vouchers prepared for transaction in which there are multiple debits and one credit, or which contains multiple credits and one debit. Now there are two types of compound voucher. One is debit voucher and one is credit voucher. Now let us see what are these. Debit voucher is a document of a transaction that contains multiple debits. Remember that debit voucher, multiple debits and only one credit, and credit voucher is nothing but multiple credits and one debit. This is known as compound voucher. Now I hope this chapter was little bit easy, but for this compound voucher you will get more understanding while preparing journal entries. For the time being, you just try to by heart this, or you just try to keep in your mind what is meant by debit voucher and credit voucher and what is difference between these two. Now for today we will wind up the session here. Thank you.